Okay, so we have a potential buying opportunities in the markets at the moment with the Aussie dollar against the US dollar, and we have the Aussie dollar against the Japanese yen. And it's important to understand Australia's dependence on its main export, iron ore, and how that has a big impact on the currency's value in the currency markets. And then we can also link the S&P 500, the US stock market, to the iron ore price, because if the US economy is growing, then the demand for commodities are growing, and that means the demand for iron ore, which is Australia's main export, will increase, and that will boost the currency in the market. So it's going to have a look at the Australian economy and show you their main exports, again, which is iron ore and coal, China being their main trading partner. And what we can do is we can go over to our endogenous analysis of the Australian economy. We can look and we can see that we have in red the iron ore price, and in green we have the Aussie dollar US dollar exchange rate. Now remember, iron ore is a commodity and commodities are sold in US dollars. So what that means is that when the iron ore price is falling, usually because of a drop in demand, the Aussie dollar US dollar automatically weakens because there's less money coming into Australia because the demand for that main export has decreased. And the central bank in Australia has to cut interest rates to purposefully devalue the currency quickly to help the currency go lower, so they can be selling their iron ore at a lower price and try to pick up sales as the demand falls. And then when demand increases, we can see the Aussie dollar US dollar increases as well, and the Australian dollar then starts to strengthen as their main export demand increases, and that means more money is coming to Australia, the currency is in a higher demand, and we can clearly see there's a very, very strong correlation between the price of iron ore and the Aussie dollar, the US dollar exchange rate. Now, what we can see is when we go across back to our chart of the Aussie dollar, US dollar, if we actually put the S&P 500 on top of the Aussie dollar, US dollar exchange rate price, then you can actually see there's a very strong correlation between the S&P 500 and the Aussie dollar, US dollar. Now, why is this? Again, remember, the US is the world's largest economy. If the US is growing, then the rest of the world is growing. Then, of course, investors are going to be buying the stock market in anticipation of a growing economy, because the 500 biggest companies within the S&P 500 will be earning higher profits because of their growing economy. So growth equals higher profits. That equals higher share prices as investors buy cyclical stocks that are in line with growth expectations, and that causes stock markets to rise. Now, remember, if stock markets are rising in the US, that means global growth is growing. That means the demand for iron ore will be increasing. And as we've seen from that chart we just looked at, when the demand for iron ore increases, so does the Aussie dollar strengthen against the US dollar. So this is the reason why you get the Aussie dollar moving in very strong correlation with the S&P 500. So with that being said, S&P 500 has made a full recovery from this year's sell-off. The leading economic indicators in the United States are pointing towards growth. Of course, we have the uncertainty at the moment about the virus and the election, but once that passes and there's a vaccine, then stock markets in the US are expected to grow again. And we can see that when we had growth over the past 10 years in the United States, we had a very, very, very bullish stock market over a 10-year period in the US. So what that means is all of these sell-offs that happen in the Aussie dollar, US dollar, these are actually buying opportunities. As long as stocks continue to rise, then the dips that we get in the Aussie dollar, US dollar could be buying opportunities back to the levels where they were before the drop off. So again, Aussie dollar, US dollar right now could be a buying opportunity to take the exchange rate back up to 1-0.74. And we also have a buying opportunity for the Aussie dollar, Japanese yen, which again moves in tight correlation to the price of the S&P 500. If I put the S&P 500 back on this chart, you literally see the same thing again, exactly the same. So again, you can look at all these drop-offs as buying opportunities. So all these dips that we get, you could be buying the Aussie dollar back. And again, we have another buying opportunity right now to get the Aussie dollar back up to where it dropped off around 78 in the exchange rate. So we've got some really good setups. Remember, guys, you can also come over to my trading analysis channel to get free market analysis and setups, as well as following signals as well if you're interested. And I'll put the link in this video. So good opportunity to take these trades: Aussie dollar, US dollar, Aussie dollar yen. Thank you.